PC sales slumping worldwide in the first quarter of the year, with Apple seeing the largest drop of more than 40%. That's according to the latest data out from market research firm IDC. Now, yet tech stocks are rallying overall as investors are seeking shelter from the recent banking turmoil. But what does all this mean here for forecasts for this earnings season? We want to bring in Constellation Research principal analyst and founder Wang. Ray, it's great to see you here. So lots to unpack. You got what we want to talk to you about today. Let's start with the drop that we're seeing in PC shipments. Apple there obviously taking the brunt of it, posting the largest drop year over year. How big of a blow is this to Apple?
Well, PCs make a small part of Apple's revenues, but not not an insignificant amount. And we've been expecting this for the last 6 months, mostly because we're coming out of a pandemic cycle where everybody refreshed. And so the next refresh cycle is going to be in 18 months. And I think we're going to have to wait that out, not just with Apple, but with other PC manufacturers as well, as you're seeing for Lenovo, HP, and Dell. And so you've seen Apple getting signs of this by cutting chip orders from TSMC over the past quarter. And we also have a glut in memory chips, but not in auto, GPU, or TPU for AI.
So let's talk about AI here. Big topic. We've seen Microsoft pivot to it recently. Google arguably pivoted to it in 2017. But it's come with fits and starts. And of course, there are problems. Just give an overview, if you could, what the major players are doing and how they're addressing some of the hiccups that they've had so far.
Yeah, so we're seeing a big push in AI from Microsoft. Satya is all in on AI. You see it across the Microsoft portfolio of products. It's coming in Bing for search. It's in Copilot. It's part of the open AI investment. And you're seeing the Azure data centers really strain under this, mostly because they're first generation and fairly inefficient. And most folks a few weeks ago experienced some glitches on Office 365, as you could see that. Google, on the other hand, has been taking a much more measured approach because they understand that if they release something too early, they're going to have some issues where people have lack of trust and accuracy of a search. So they've been taking a little bit slower approach. And then meanwhile, chip manufacturers like NVIDIA with their GPUs are going to be doing really well because they're positioned because AI requires a lot of compute power. And then across the board, you have other companies like Oracle in the AI app space, C3 in the AI app space, and companies like Adobe, which is taking AI to the next level.
Ray, is AI going to be the buzzword again this earnings season? Because it seemed like every time a tech company, really any company, mentioned AI, we saw that stock take off following its earnings results. Is that going to be the same case this time around?
We're going to see a lot of talk about AI. We're in the middle of that hype, but the challenge is we don't have enough data and we don't have enough compute power to do general AI the way we want to. And so a lot of companies are going to have to get really good at creating synthetic data, expanding their data sets, or actually having exponentially differentiating data sets. So we haven't hit that piece yet, but as people realize, I think I said this before, at some point ChatGPT thought I went to Harvard, but I wrote a book for Harvard Business Review. But my mom was pretty happy for a few weeks.
Yeah, my mom never had that problem. She's still wondering why I wouldn't. No, I'm just kidding. I got to ask you about the tech rally that we had in the first quarter of the year because we have tech earnings on deck in a few weeks. What is the market expecting here? Because arguably that rally that we saw in Q1 was more about the Fed. As I'm reading in your notes, you tend to agree with that. Then it was the basics, the fundamentals of the tech trade. But how do you think this the next few weeks evolves here?
I think it's going to be a crucial point in tech earnings. Market already expects some bad earnings. The Fed rate hikes were at near peak. So we're hoping that the Fed hikes are going to come down. But the challenge is not all the tech stocks are doing well. If you're not in analytics, automation, AI, cloud, or cybersecurity, you're at risk because you're no longer deemed as critical. We talk to about 1,000 CXOs on a regular basis, and they're all in the midst of cutting costs, renegotiating contracts, and we're about to see that wave come through on the tech earnings.
So, Ray, you joined us at the beginning of the quarter. You were all in on Matana. A number of those names have done well. That's Microsoft, Apple, Tesla, Alphabet, NVIDIA, and Amazon. Meta, though, was not included in Matana, and that stock has done very, very well since the start of the year. What do you make of that really meteoric rise and whether or not that trend to the upside can continue?
They did amazing, right? And if you look at the top 5, top 6 stocks, it's still within Metana, and then Meta is right at the edge of where the old Fang stocks were. Meta did well at about 76% growth for the quarter, and it's because having billions of users and active users is still very important. Even though ad tech is down and ad sales are down, they're still able to hold their numbers, and they did a lot better. And of course, the market had overcorrected for Meta before the beginning of the year.
I want to ask you about the tech layoffs and how that's progressing. We got I think it was late last year, we started getting the dribbles. Has this and we haven't seen it really translate into some of the big payroll numbers that we track on a month-to-month basis, but just wondering from your inside view in the industry, how is this progressing and is it set to get worse?
So right now, most organizations have gone through a 5 to 12% restructuring. And what that's been doing across the board is they've taken out projects that were probably experimental. And this is what happens when you have a low interest rate environment. You can make a lot of big bets. But as everybody realized, there's a lot of efficiency out there. What Elon was able to show by cutting the number of engineers, and he might not have gotten the right number down, but there's a lot of automation ahead and a lot of AI that can be applied. And I think every organization is right now trying to figure out what level of operational efficiency they can deliver. So we're going to see how automation and AI continues to change how we work as we fully automate. We're going to have to ask, when do we do full automation? When do we augment a machine with a human so we can train them? When do we augment humans with the machine so we can be a lot more efficient? And when do we actually insert the human touch and actually have personalized service?
Yeah, I'm waiting for Google Brain right here myself. So on pins and needles, Wang, thank you very much. And always appreciate your insights here.